please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. There is a bit of a Friday cheer, of course, in the studio. And the markets are allowing that. There's so much quiet. Of course, the US markets recovered from the day's lows, but it's still ending flat and the Asian markets are reflecting that. No Nikkei today. Holiday for Greenery Day. Can you believe it? I mean, it's about time we also had that. Both the holiday and the greenery. But the markets are not giving us too much by way of any huge positive or negative cues. The Nifty as well has, it seemed to break that range. Now it has again gone inside the range, below 10,700. So, there isn't much by way of trend. If you looked at, it's possible that the markets just want to be quiet till the Karnataka polls are out of the way. Or possibly there's nothing by way of earnings as well to really vault the market. The numbers we got. Yes, of course, the NBFCs have been doing well, the Pnb housing and the L&T Finance. But all the bigger ones, Jsw Energy, Donnie Ports or HCC, all of them have given us cause to worry. So there's nothing in the micros over the last 24 hours to really give us a huge heave. So looks like it's, directionless and placid at the moment. Morning.
Hi, good morning. Yes, before the day begins, when you start planning your weekend, I guess everyone's in Friday mood, right? But the thing is that the Nifty Bank has been performing for the last 3 days. And even if you look at the entire week and how it's shaped up, all these stocks, Kotak, HDFC Bank, HDFC have all, outperformed and gone up quite a bit. So let's see how that shapes up, because I understand from a lot of traders that it's gone above the psychological level, the Bank Nifty that is. But for our own markets, Anuj, morning, they were selling by FIs and DIIs yesterday. So do you get a sense that it'll be volatile, but it'll be within this range of, 10,600, 10,700?
Morning, Sonia. One thing which I've learned is that, I don't care what I think or what anyone thinks. I have to respect what the market is telling me. And look what the market has told you this month, for example. Only 2 days, of course, in this month. But the Nifty is down 0.5%. The mid-cap index is down 2.5%. And we discussed it, yesterday morning also, that the market has given you a warning sign. It's up to you to heed to that or not. Junior down 2.6%. This is a good market internal, that the Nifty Bank is up 0.3% while Nifty IT is down 3.7%. And I say this because it means that the leadership index is correcting. And if the leadership index is correcting swiftly, it will bounce back even more swiftly. At some point, IT index will once again bounce back and make a new high. This is an IT-driven market for us for some time now. As of now, the buy on dips thesis is working. Even yesterday it did for Nifty and the Bank Nifty. The stop loss is very sacrosanct, 10,647. That's the series low. If you start to break it, then perhaps I think a short trade opens up, but break it convincingly. It's not that if you go to 10,646, that means a short trade is on. So say somewhere around 10,620, 625. If that is respected, once again, I think we might go through a day where after some selling, the market decides to bounce back and rallies a bit. The first day low, anecdotally, if it's breached, the market's correct. So that, I think, as I said, is important to watch. Now, the mid-cap correction started on Wednesday. It continued yesterday. Normally, by Friday, that cleanup is complete. And that's, mid-cap driven corrections are always healthy because that means that weak hands are getting out of the system. So perhaps some more correction. Leverage positions, they remain at significant risk. We'll, talk some of them. Still a good time to move from the mid-caps and small caps to safety of large caps, because this is a month where you have some events lined up and don't want to take that unnecessary risk. And again, the market has given you warning signs that in the mid caps something is unraveling there.
You can always pause till the first 2 weeks, right? Because this is a long week. This is a 5-week series.
Yeah.
And by May 14th, the exit poll results will be known. Yeah. So actually, the volatility is to be played, and one can always start afresh on May 14th. There is enough to play the series even after the big event is out of the way.
Okay, well, let's kickstart the show on that note and tell you what our wise experts have to say as we head into trade this Friday morning. Alexander Redman of Credit Suisse is our wise man for now. He says recent market movements in the US interest rates and dollar strength have given cause to cast the spotlight once again on emerging market debt sustainability. From analysis of the IIF, BIS, IMF and World Bank data, they do not believe that there is a systemic debt predicament. facing emerging markets. Credit Suisse remains overweight on emerging markets right now.
Okay, that's good to hear that even if there are interest rate hikes in the US, emerging markets debt is not in danger. Now for the money market views, Bhaskar Pada of HDFC Bank believes the dollar index rally paused ahead of US non-farm payroll numbers that are due today. This has coincided with a slight change in perception about recent rupee depreciation against the USD. Bhaskar Express USD are paired to trade very rangy actually, 66.55 to 66.75, mimicking the USD AXJ movement, that is ex-Japan Asian currencies.
Okay, and Bhaskar Panda, he also talks about the bond market. He says that the Indian bond markets remain subdued and orderly yesterday as the Indian 10-year benchmark yield remained in a tight range. He expects a similar behavior to persist today as the 10-year benchmark yield remains range-bound between 6.7 to 6.75%.
Okay, quite a bit of comeback for the US market overnight from the lows of the day. Here's Nigel with the world view.
Well, that's right. When we were going to bed, in fact, the U.S. markets were trading deep in the red, but they've recovered all those losses and, in fact, ended more or less flattish. What happened overnight then? Initially, there was reports that suggested that, in fact, there were some measures that were going to be taken by the Trump administration on some kind of sales in the telecom space on Chinese firms. Donald Trump came out there, he put out a tweet and he said that, no, we are friends and we're continuing to be good friends and we're going to maintain relationships going ahead. And that's what led to a bit of a recovery in yesterday's trading session. And that explains why the Dow, from being down nearly around 400 points, ended as flat as can be. From the Dow itself, we had a few losers. Nike was under some pressure. General Electric as well was on the losing end. But what really battered for them yesterday and what led to the recovery was Boeing. After its numbers, the stock has seen selling. That ended with a gain of around 2%. And that's what led to the fight back. Tesla was another stock that was in focus overnight. Remember, the numbers were better than what the street was working with. But CEO Elon Musk, he dismissed certain questions from analysts, and the street didn't like that. Stock was down 5.5% overnight. Shifting focus to the European markets, we had red on the screen over there. The inflation numbers were a bit of a disappointment. It's raising questions of why exactly the ECB wants to go ahead and tighten that stimulus measures that are out there. Asian markets this morning, they've opened up more or less in the red. All eyes are on the talks between the United States and China. For the time being, those markets are struggling. The Japanese market is shut, but the SGX Nifty is suggesting a cut of around 45 points odd. Back to you. Okay,
well, I could hear a bit of that analyst call, Nigel. You know, he actually said no bonehead questions from analysts.
You know, it reminds me of what happened with Steve Jobs during the Apple time, where he had threatened to become a liability for the board. And that's something that, Tesla is also speaking about. So let's see how that one goes. Interesting time.
Interesting comparison as well. Okay, let's listen into one more expert opinion on the Asian markets, and then we'll go into a break. Steve Bryce of Standard Chartered Private Bank says there is still good money to be made from US equities. Listen, we are back with our research team and the top 10 list of stocks to watch.
When we entered the year, our view was that the dollar would weaken over the next 12 months, but the view in the short term was that there's a huge short positioning against the dollar, so we should see a short-term bounce. So actually the surprise to us is that this bounce has been delayed by 4 or 5 months as we came into the beginning of the year, because that short positioning usually leads to any positive news being good for the dollar. And clearly from that perspective, that's finally coming through. We've seen interest rate differentials widen in the dollar's favour actually since November last year. So there's some fundamental support for the dollar here. We still believe there's good money to be made from equities generally. The US has obviously been a key driver from an earnings growth perspective, and we believe that the economy is going to see another further leg higher, so the tax cuts leading to stronger economic growth in the form of capital spending. We also see this increased earnings. Yes, we've seen earnings expectations rise very sharply. I think from our perspective, we're now expecting that to feed through into more merger and acquisition activity, more shareholder buybacks and more dividend payouts. So probably a further leg coming through in terms of the outlook for US equities.
All All right, welcome back. You're still watching Bazaar Morning Call on CNBC TV18. Things are looking slightly under the weather across the SGX Nifty and across some of those other markets. But remember, the US market staged a huge recovery, a lot of volatility there. Let's see how our own market shapes up. Our research team has now joined us to give us a list of top 10 stocks to watch for the day. So let's welcome all of them bright and early this morning. Anuj, what are you looking at?
So, Sonia, my sense is, again, today we'll have a day where by noon or thereabout, I won't be surprised if we have another 200, 250 point fall in the mid-cap index. So, and perhaps then a late recovery because most of the weekends will be out. IRB Infra, it's a stock which has seen big unwinding after getting into F&O ban and a classical case of 20 DMA halt, very volatile stock. So, that one could be interesting today. And Tata Motors, you know, it's within 5 rupees now, a fresh 52-week low. And this is a classical Tata Motors cycle playing out right now. Good news hits the screen and it's you know, rallies and then sells off, and you know, that will continue. I think it's a stock where on rallies you see high delivery based selling, and perhaps fresh 52-week lows are in the offing for Tata Motors.
All right, now we get to the results. Well, first up, Vedanta. What is the consolidated number looking like?
Well, more good than bad, Lata, if you have to take a look at it. Remember, for Vedanta, as I explained yesterday, Hindustan Zinc has already come out with a set of numbers. So you're looking at the aluminium business, and yes, that was better than what the street was working with. The power business as well did quite well. So overall, it was a beat. Brokerages like it. CLSA, they say, in fact, that the stock at around 6.5 times EV upon EBITDA. It's not very, very expensive. Hence, they maintain a buy. But they've cut the target price. They're factoring in some shutdowns as well as cost spikes. So the target price of around 390. Edelweiss as well, they say the numbers were ahead of their expectations. They as well are factoring in some cost pressures in Zinc International, Zinc India, as well as the aluminium business. They as well have tweaked their target price, but that is at around 410 rupees. So the stock should continue to do well.
Okay, thanks. Nigel, Ekta, why Sun Pharma?
Well, the stock was one of the top gainers on the Nifty yesterday. It was up around 4%. There was delivery of around 44% on that particular stock. There was a lot of speculation about this Nexium generic approval that they received yesterday from the US FDA and which plant they have received it from. So the speculation was that it's likely from the Halol facility. But I spoke to a lot of the analysts overnight and they have mentioned that it's likely to be from one of the remediated Ranbaxy facilities or it's likely to be from the Dadra plant, and hence I expect the stock to probably be in the red today.
Yes, in the red, and this is deja vu, second time it's happened, and you know, this doesn't help anyone actually. Just to you know, the drug has got approval, and you know, you start speculating whether it's from Halol.
The plant has got approval.
Exactly, and you know, but last time also it happened, the stock rallied, and then after that you saw big decline. So just be of course a bit careful about this. Hexaware was very volatile yesterday. Going into the numbers, we were wondering what the company might deliver. And nothing inspiring, Rima, right?
Yeah, Q4 was a mixed bag. So on the revenues, there is a beat. So dollar revenue growth has come in at 3.9%. Margins have come in lower than expectations, a dip of 20 basis points on account of increased sales and marketing investments. Profit growth is looking good at 18% growth, but that's on account of Forex. So to summarize Q4, revenue beat, margins miss, and profits driven by Forex. The company continues to maintain its calendar year revenue guidance of 10 to 12%, which the analyst community believes will be quite conservative given the strong start to the year. But as you said, the stock has seen a big run up, 23% up in the last 3 months. So I guess part of the good news is already priced in on the revenue front.
Okay, part of the good news priced in on the revenue front. But let's talk a little bit about Castrol. The numbers were actually a mild miss this time around. It was slightly below street estimates. Higher input costs is what really impacted the margin performance. So absolutely flat on the margin front. Even if you look at the revenues, the volume growth was hardly 2.6% versus an expectation of around 4% or so. And the profits too hardly grew this time around. So I expect the stock to be under pressure because of this.
Yes, and it's almost a story which keeps playing with Castrol, somehow not able to deliver on earnings. But Anisha, Adani Power's numbers?
Well, yes, there is a bit of glimmer of hope that the margins have expanded to 32%, but I have my concerns about the numbers because remember the revenue is down about 36%. We know that the Mundra power plant has been shut for the last couple of months, but my concern is that the management says that the talks regarding Mundra power plant are in exploratory stage, suggesting that at least in the near future the plant may not restart. Other than that, the losses, yes, optically look lower at 670 crores versus 4,900 crores reported last year, but do remember there was an exceptional loss of 4,200 crores that they took last year. And also importantly, the auditors have issued a modified report. Now, a couple of qualifications is what they have been reporting over the last couple of years as well. But one of the qualification is new, which is regarding the acquisition of Kodra Power Plant. Back to you.
Okay. Another qualification, so just watch out for that stock. Mangalam, Emami's numbers didn't excite.
Well, optically they did not excite, but post-markets the press release came by and the internals weren't that bad because the comparable revenues, they grew by 10%. The joker in the pack, international business, that one grew by 37%. The company posted a volume growth of 9%, which was a little above expectations. 7 to 8% is what we were working with. And individual products, like we were talking about, Navratna, because of summer, did 14% growth. Kesh King, while it did not do a Vatika as you expected, but did not do a Parachute as well. So that one was up 6%. Healthcare continues to be under a little bit of pressure. The company is spending more on ads. They spend 30% more. More importantly, for the FMCG space, this is the fourth company which says that the rural growth is outperforming urban growth, and that trajectory is likely to continue in FY19. So that is one thing I'll watch out for.
Okay, what about Jsw Energy, Anisha?
Well, the earnings are really not improving, and that's the problem, because remember, this time around as well, the revenue is below expectation, the margin is below expectation. Profit is, of course, hit by a one-time provision that they have made regarding their transaction with Jaiprakash Power Ventures, but it just that as well, the company has reported a net loss versus an expectation of a profit. The analysts also sound a bit, anxious, because Macquarie, for example, says that the earnings downgrade might continue. They also say that the capex increase for EV business to 6,500 crores versus 4,000 crores is a bit concerning, and they raised a bit of red flags regarding the advance that they have given to Jaiprakash Power Ventures. In fact, we talked to the management in this regard. Let's listen in what they had to say.
Out of the 1,000 crore, we had pending 752 crores. Of that, 584 crores have been provided for, and balance money is recoverable based on the various cases at tariff order which are pending and which will be adjudicated, and we believe that we will recover that. And for the entire recovery, we are taking a legal opinion, and then we are working to take a legal recourse to take the JPVL into NCLT. Total capital expenditure we are planning is 6,500 crore for the EV business, of which 1,000 crore will be in the FY19. And in case of solar, we are contemplating 1,200 crore capital expenditure for 200 megawatt of the solar power plants, which will be both for the rooftop as well as the floating solar. And we are also setting up a 1,000 megawatt solar PV panel manufacturing facility, which will be commissioned in the FY19.
Okay, well, infrastructure companies all reporting expectedly a lot of debt. Well, Sonia, let's come to something which has a good set of numbers. BST tellers?
No, in fact, it was a massive fall that we've seen this time. I mean, I understand where you came from because it was a darling of the market, but this time a huge fall is what we've seen. April tiller sales are down by 42%. Just look at that graph. And, tractor sales are down by almost about 56%. I haven't seen these kind of numbers in a while. So we need to get to know from the management what went wrong.
Yeah, maybe they just overdid and overstocked in March. Look at the March number. Yeah. So it's quite possible that it has to be ironed out, but we'll have to speak to the management. Okay, Abhishek, L&T Finance numbers were good.
Very strong set of numbers coming in, Lata, and one of the best quarters in the last 8 quarters. So the net profit came in at 409 crore versus our poll of 370 crore. The asset quality improved with gross NPA declining by 70 basis points sequentially to 4.8%. The AUM growth, that is the loan book growth, was the highest in 8 quarters at 25.5%. And despite the fact that they raised capital of 3,000 crore in Q4, their focus business ROE has remained stagnant at 16.7 versus 16.9 in the previous quarter. The defocused business continued to decline and now is at around 1,500 crore, forming less than 2% of the book. Expect the stock to be in green today.
Okay, NBFCs, most of them have done very good, posted very good numbers. Anisha, HCC, we already had a warning.
Well, yes, Lavasa Corporation auditors had already raised a red flag, and now we understand HCC, the losses have expanded to over 1,000 crores. Even the order inflow was really unimpressive below 300 crore mark. And as far as the auditor comments are concerned, now this is not the first time that they have given their comments regarding HCC on a consolidated basis. But yes, they do talk about the financial systems being not that strong. They also talk about how current liabilities are more than current assets for some of the subsidiaries, and also raise a point that they have not got confirmation regarding creditors and lenders outstanding opening balance. So that might play out on stock today. But the management continues and clarifies to say that they're working on a debt resolution plan for Lavasa as well, and they continue to work to bring down the debt as well.
Okay, well, thanks for that. Abhishek, what about Pnb Finance? How did it look?
Well, Sonia, the robust balance sheet growth actually continues. So over the last few quarters, the balance sheet has been growing in the region of 47 to 55%. But this is coming at a cost, and that is the yields. The net interest margin has been falling from 3.4 to now about 3% is the lowest net interest margin, owing to the fact that the yields are declining. They have declined from 10.5 to about 9.9. And this is on the back of the fact that they have 30% of their book in high yielding non-home loans, and about 58% of the customer base are non-salaried, which is another high yielding market. So disbursement remains strong with 44% growth on a YOY basis, while net profit at 219 crore is slightly below our poll of 227 crore. Asset quality remains stable with gross NPA at 0.33 versus 0.42. Expect the stock to be in red today.
Actually, in many of these NBFCs, the year-on-year number is very good because the previous year was demo quarter. And even after very good numbers like DHFL and India Bulls, the stocks are not rising but peaking off because of the way in which yield market, if the government is borrowing at 7.8%, then obviously these guys have a problem in terms of the cost of money going up.
Okay, fair enough. But Mangalam, what about trend?
Well, trend numbers look good, Anuj, especially on the operational front. The revenues are up 18%. EBITDA actually grew by about 78%, leading the margins higher by about 150 basis points. Jefferies expects, or they've calculated the West Side SSSG to be around 7 to 8% same-store sales growth, that is, which is higher than Shoppers Stop, which posted a decline. So that is a positive. However, they say Zara continues to be under immense competition from H&M, and the stock trading at 58 times leaves limited headroom for any upside. So we'll keep an eye out on how it performs, but operationally very strong numbers.
Okay, very strong numbers. This is really the space to be in, right? I mean, look at the way, the wealth that this space has created over the recent past. But Anisha, what about Adani Ports?
Well, Adani Ports, there's a bit of disappointment when you look at the internals because the cargo volume growth was just around 4% versus expectation of 10 to 15%. Also, the fact that the dividend policy that they have changed is just around 15% does not really enthuse the analysts. That is what Macquarie says, that the increase in the dividend allocation policy is not enough. The guidance is a bit of a dichotomy. Some of the analysts are reading it as strong given the low base of FY19, but there are others who do not, who are not very impressed given the fact that Mundra Port this time around also did not register very strong growth. So I expect the stock to remain in red today.
Okay, thank you very much for that. One infrastructure company after another indicating stress. Well, now for the bunch of other results. Sonal, tell us.
I'll start with the good ones first. Orient Cement, good set of numbers. The EBITDA was flat at 74 crores, but operational efficiencies, that led to PAT growth, and it came up by around 22%, and that was due to lower depreciation and finance costs. Tirumalai Chemicals, another very good set of numbers. The profits went up by 105%, and that was majorly because the finance costs, they went down by 72%, and depreciation, that went down by 34%. Himachal Futuristic Communications, another good set of numbers. The operating profit margins, they expanded by 400 basis points at 7.9%. Even the profits went up by 83%. Expect all these stocks to be in green, but now to some bad results. Orient Green Power, revenue was down around 41%, and EBITDA also came in lower by around 38%. Sri Renuka Sugars, the sugar companies have been telling us their cost of production is higher than the selling price, and it was expected that they'll be delivering a loss. So they have delivered a loss of 426 crores versus 117 crores last year. Expect that stock to be in red. Last, Mafatlal, that also reported an EBITDA loss of around 3 crores versus an EBITDA loss of 1 crore last year. Expect that stock to be in red as well.
All right, guys, thanks a lot for that. Here's a quick recap now of our top stocks to watch. Expected to gain today are names like Vedanta, Hexaware, Imami, L&T Finance, Trent, Orient Cement, Tirumalai Chemicals, and Himachal Futuristic. While stocks expected to be under pressure today, IRB Infra, Tata Motors, Sun Pharma, Castrol, Adani Power, Jsw Energy, VST Tillers, HCC, Pnb Housing, Adani Ports, Orient Green Power, Sri Renuka Sugars, and Mafatlal. So as you know, as you can see, more red than green perhaps.
Okay, and here's a CNBC 10 exclusive which got confirmed later on in the day. Yesterday, the Tata Group's defence play is taking shape. Tata Motors board yesterday approved the sale of its defence arm to TASL, as did Tata Power earlier, if you remember, about a month ago. Nisha is here with the details.
Oh yes, Lata, it is going to be a powerhouse for defense play of Tata Group, and Tata Motors has agreed on selling its defense-based businesses to TASL. Now, first, one arm is specialized defense project, which will be sold for 100 crores, and 3% of the revenues will come for 15 years to Tata Motors. And TAL Manufacturing Solutions will be sold for 650 crore rupees. One important bit to note is that without putting in capex, they will be getting revenues from specialized defense project, which is a positive coming in for Tata Motors. They also retain one project for which they have applied. If they get the contract, it could be high revenue generating. So that's retained by Tata Motors.
All right. Thanks a lot for that. We have to take a break on that note, and our technical experts will join us in a minute. Sudarshan Sukhani, Rajat Bose and Rahul Mohinder.